Passive income remains one of the most sought-after financial goals for people across every income bracket, career path, and geographic region heading into 2026. The term itself often gets misrepresented online. Many content creators push overly complicated strategies, high-risk speculative assets, or short-term gimmicks that fail to generate consistent long-term passive cash flow. Most people waste months testing scattered ideas that deliver little to no steady income because they overlook proven, scalable passive income methods built for the current economic landscape. After analyzing market shifts, consumer behavior changes, regulatory updates, and global demand trends for the coming year, 3 distinct passive income approaches stand above all others. These methods require upfront effort, consistent foundational work, and basic financial discipline, yet they unlock recurring revenue streams that operate with minimal ongoing input once established. Today we break down exactly what each method entails, how to launch it, what core assets you build, common mistakes to avoid, and realistic income trajectories without relying on unstable short-term trends. The first essential passive income method for 2026 centers around digital intellectual property monetization. In an increasingly digital global economy, high-quality digital assets hold permanent value because they can be replicated, distributed, and consumed repeatedly with zero additional production cost after creation. This category covers self-published written content, educational digital courses, pre-recorded video libraries, stock media assets, downloadable design templates, audio content, and niche digital tools. Unlike physical products that require inventory management, shipping logistics, storage fees, and supply chain risk, digital intellectual property eliminates nearly all variable operational overhead. The key to success here is focusing on evergreen niche topics rather than temporary viral subjects. Evergreen niches include personal finance guidance, career skill development, home productivity, health and wellness fundamentals, small business operations, language learning, and practical lifestyle advice. These subjects maintain steady search demand year-round regardless of market volatility or seasonal shifts. When building digital intellectual property, the upfront work involves researching audience pain points, creating structured, actionable content, refining material for clarity and usability, and publishing through established global distribution platforms. Once published, these assets remain accessible to global audiences continuously. Each download, purchase, or license generates revenue without daily management tasks. A critical detail most beginners miss is targeting specific subniches instead of broad categories. Competing against general personal finance content proves extremely difficult, but creating specialized material for freelance contract workers, remote digital nomads, or small home-based business owners lets you capture dedicated audiences with less competition. You also need to optimize digital assets for global accessibility, including language localization, platform compatibility, and cross-region payment processing support. Avoid overcomplicating asset creation with excessive features or unnecessary customization. Simple, functional, problem-solving digital products outperform bloated, overproduced alternatives in long-term passive income generation. Many people quit this strategy early because they expect instant returns. But digital intellectual property income builds gradually as your asset library expands and organic discoverability grows over time. Consistency in releasing high-quality foundational content directly correlates with stable long-term passive revenue from this method. Moving to the second core passive income method for 2026, dividend-focused income investing built around stable global equity holdings. Traditional passive investing often gets simplified into generic index fund advice, but true dividend passive income requires targeted selection of established businesses with consistent profit generation, strong market positioning, sustainable dividend payout policies, and resilient business models capable of navigating economic uncertainty. This strategy differs from speculative stock trading, short-term market speculation, or high-risk growth stock bets. It prioritizes steady cash distributions from mature companies operating in essential sectors including consumer staples, healthcare, utility services, industrial infrastructure, and essential technology services. These sectors deliver consistent demand even during periods of economic slowdown or market fluctuation. The foundational work for this method involves building emergency financial buffers first, researching company financial health metrics beyond surface-level dividend yields, understanding business competitive advantages, evaluating long-term industry stability, and constructing a diversified portfolio spread across multiple sectors and geographic markets to reduce single asset risk. You do not need large initial capital to begin building this stream. Small regular contributions compound over time, and dividend reinvestment accelerates portfolio growth by purchasing additional shares that generate further dividend payouts. Common pitfalls include chasing extremely high dividend yields that signal unstable business conditions, concentrating investments in a single industry or region, neglecting long-term company fundamentals for short-term payout numbers, and reacting emotionally to daily market price swings. Passive dividend investing succeeds when you adopt a long-term ownership mindset rather than short-term trading behavior. Once your portfolio reaches a foundational size, regular dividend deposits hit your account with minimal ongoing effort beyond periodic portfolio reviews to maintain diversification and remove declining assets. This method works for both new investors starting with limited capital and experienced investors scaling existing holdings, as it aligns with long-term global economic growth trends rather than temporary market hype. In 2026, global economic shifts will reward businesses with strong cash flow management, low debt burdens, and loyal customer bases, making carefully selected dividend holdings one of the most reliable passive income foundations available. The third non-negotiable passive income method for 2026 is peer-to-peer asset sharing and rental income from underutilized personal and commercial assets. This strategy leverages existing physical resources people already own or can acquire affordably to generate recurring rental revenue through global sharing economy platforms and direct local market connections. Assets eligible for this passive stream span residential living spaces, secondary rooms, storage units, vehicles, recreational equipment, commercial equipment, office space, parking access, and specialized hobby gear. The core advantage of this method is its immediate income potential compared to digital asset building and long-term investing. Once you prepare an asset for rental use, set clear usage rules, implement basic maintenance protocols, and list the asset on relevant marketplaces. Regular rental bookings create consistent cash flow with limited daily oversight. Modern digital tools streamline booking management, payment processing, damage protection, and client communication, removing most manual administrative burdens that once made rental income highly active work. To maximize passive returns here, focus on high-demand, low-maintenance assets rather than items requiring constant upkeep or frequent repairs. Residential short-term rentals work best in locations with steady tourism, remote work relocation trends, or local event demand. Storage units and parking assets perform reliably in urban centers and dense suburban areas with limited available space. Vehicles and recreational gear see consistent demand in regions with outdoor activity culture and seasonal travel patterns. Critical steps for success include securing proper insurance coverage, establishing clear rental agreements, maintaining asset condition to reduce long-term depreciation, and pricing rentals competitively within local market ranges. Many people avoid this strategy due to fears of asset damage or complicated management, but standardized protection policies and automated booking systems eliminate most of these risks in 2026. Scaling this method involves adding additional low-maintenance assets over time rather than over-relying on a single high-risk item. This passive income stream balances well with the previous two methods, as it delivers faster short-term cash flow while digital intellectual property and dividend investing build longer-term wealth stability. Now we connect these three methods to create a balanced passive income portfolio tailored for 2026 economic conditions. Digital intellectual property builds scalable global revenue with zero physical overhead. Dividend investing generates stable long-term compounding wealth aligned with global economic growth. And asset rental sharing delivers immediate recurring cash flow from tangible resources. Each method complements the others, offsetting individual weaknesses. Digital assets face minimal risk of physical loss but require upfront creative work. Dividend investing carries market fluctuation risk but builds lasting financial security. Asset sharing relies on physical maintenance but provides fast income validation. No single method outperforms the other two universally. The optimal approach combines elements of all three based on personal available capital, skill sets, time capacity, and risk tolerance. Beginners can start with one method before expanding into the others, while experienced income builders can allocate resources across all three simultaneously. Regardless of starting point, passive income success in 2026 hinges on consistent foundational setup work, long-term mindset, risk diversification, and avoiding get-rich-quick schemes that dominate mainstream online financial content. These three proven strategies cut through market noise and deliver sustainable passive revenue designed to withstand changing economic conditions, shifting consumer behavior, and evolving global market rules. If you found this breakdown of the only three essential passive income methods for 2026 valuable, hit the subscribe button below to stay updated on practical financial strategies tailored to current market realities. Leave your thoughts on which passive income method you plan to prioritize first in the comments section, and share any questions you have about launching these revenue streams in your personal financial journey.